Let's check in on the oil price again. OPEC, and you can see oil is down. OPEC is cutting projections for the amount of crude it's going to need to deliver this quarter. Of course, it wants to make the case for that in theoretical 2 million barrel a day production cut that was announced last week. That production cut outraging the White House, according to multiple reports. Let's get more on the crude market from Bill O'Grady, Chief Market Strategist at Confluence Investment Management. Bill, the politics of this thing are fascinating. Apparently, Mr. Biden's team are just outraged at this move by Saudi Arabia to potentially push up oil prices.
Yeah, they are. They're quite upset because this one of the key factors in how polling has gone is what's the price of gasoline, and this we started to see gasoline prices edge up a bit, even though this is a time of the year where gasoline demand tends to soften seasonally. So yeah, this move by OPEC and primarily by Saudi Arabia, I think, is being viewed as hostile.
Yeah, Mr. Biden saying he's going to impose consequences on Saudi Arabia. And apparently, the door is open potentially to a halt to arms sales. Sounds like a stretch. It's very lucrative for America, but also potentially allowing price-fixing lawsuits against oil producers.
Yeah, there's the NOPEC measure that has actually bounced around for a long time. And whenever the U.S. gets a little upset, it tends to resurface. I'm not really sure how that would work in practice. There are assets in the United States, the Saudis own, that I guess theoretically could be seized. The arms sales is kind of a big deal, although, the Saudis will certainly find those arms somewhere else. But it does show the degree of anger that is being felt right now in Washington.
I suppose Biden does not want to drive the Saudis closer to Moscow.
Well, if he doesn't, he's not using tactics necessarily that will help him in that endeavor. One of the problems that kind of has developed with policy in the Middle East is that you're starting to see stark differences between the two parties. And that's something that we didn't see during the Cold War.
Between the two U.S. parties, Bill?
Yes, okay. Between the two U.S. parties. The GOP's policy in the region is to try, first off, both parties want to reduce their exposure to the Middle East. They want to focus on China. But how they want to go about that is starkly different. The GOP wants to bolster the Abraham Accords, which essentially isolates Iran. The Democratic Party is actually trying to elevate Iran in order to, avoid a power vacuum. And, from the Saudis' point of view, the Democrats' plan is really bad. So they have a natural affinity to want to help the GOP.
It's interesting, isn't it? Because Iran has been, ever since the hostage crisis, I guess, back in the Reagan-Carter days, America has been at daggers drawn with Iran. But it sure would change the dynamic, wouldn't it, if Washington gradually opened up to Iran?
Well, it is. And if you remember back to the Obama administration, early on, that was one of President Obama's goals, was to soften relations with Iran, and the Iran nuclear deal was part of that. And I think Obama felt that, Hillary would continue the process. And of course, she didn't win the election, and policy immediately reversed. And you'll also remember, it was one of the first places that President Trump visited was Saudi Arabia. And there was a full court press brought by Riyadh to bring the new president on side, and actually I think it was very effective.
What else is driving the oil price right now? What's jumping out for you, Bill, please?
Well, the bigger, broader issue is the global economy. The IMF's meeting in Washington this week, and they just issued their forecast, and it's frankly pretty dire. We're looking at significant policy tightening across the world. The dollar's screaming higher, and all this is conspiring to put pressure on oil prices. And in fact, it's pretty impressive that oil is holding up as well as it is in the face of weakening economic growth, the COVID lockdowns in China, and the dollar being as strong as it is. And I think it's a testament, really, to just how uncertain the world is right now and desperately wanting to ensure that they have energy supplies.
Yeah, because there was a report today of a disruption on a Russian oil pipeline to Europe.
Yeah, and that's something. The Ukraine war is steadily broadening, and the Nord Stream attacks were, I think a really significant act. And obviously, we don't know for sure who did it, but we all have our suspicions that it was Moscow. And again, this could be just an innocent problem on this pipeline, but the other thing I've been watching too, and it's not exactly oil related, but there was a cyber attack on the German rail line. So you're seeing this kind of broadening interference with infrastructure. And whenever you have these kind of things occur, the natural reaction is, I better hoard. I better get coal or oil or natural gas and have it just in case I'm going to need it. And of course, that helps support the market.
Yeah, apparently Poland it's assuming, or it thinks right now, that the leak on that oil pipeline, the Russian oil pipeline, was an accident. But of course, it's early days yet. So you think that it is surprising, given the gloomy economic outlook, you think it's surprising that oil is holding in where it is?
Oh, I do. You can make a really good case for low 60s for oil, based on what we're seeing, and frankly, based on the dollar alone, you can get there. Plus, you've got these persistent SPR releases, which have historically always depressed the price. But in spite of all that, that hoarding instinct is very strong. And, once we reach a point where it will be imprudent to draw the SPR down further, it's quite possible we'll see a jolt higher in prices unless the global economy gets significantly worse.